All right, good morning, everyone, or good afternoon. Scott Henderson, shooter. We are going to go through some charts here in our town hall meeting. We do this every week just to try and give a review of what's happening for this week. And of course, at the end of our presentation, please do review our disclosures. Okay, let's jump into this. Start off with the SPY. Now, with all the technical tools today, sometimes it can get noisy. Sometimes we just need to sit back and look at, well, where does the smart money want to be? So where are they going to buy and where are they going to sell? And by the way, there's this little indicator I like to be able to do this. It's by Lux Algo, Smart Money Concepts. And it, I find, gives me a very big visual of that on a chart. Now, what else I have here on my chart today is I have our Elliott Wave Absolute, which I find is not necessarily accurate for wave count. However, the projections off the prior leg are pretty spot on. So I'm using this because it gives me a quick rendition to see where our retrace should go. And just as an example, I like to measure what I refer as our cycle mounds in Elliott Wave. So I like to measure a peak and a trough and a peak to get a visual of where my corrective legs are. So, and this comparison is what I like to look at. So on my measurement, I'm seeing the 50% fib, and Lux Algo is pretty close. I mean, it's $3 off from what I see as my golden box between that 50 fib and the 78.6 fib. But just as a visual, just so the comparison there, it's just a quicker way for me to look at this. Now, if this is the correction, and one of the main reasons I said the top was in was just because of the preponderance of the evidence of everything that's happening and where we are, and the fact that we haven't had a decent pullback. And, historically, if we look back in the chart, we do have pretty aggressive correction and then some minor corrections that have occurred within the leg. Well, if we just look at our prior mound structure from our trough to our peak to our trough, we have two expanding corrections. We've had none here. So the way I see it is, at least we have a correction that is roughly, $30 to the downside. I'm pretty solid with saying, hey, we're going to get something close to that, I would think. And then there is a potential outcome that we get something closer to this correction from 564 down to 510. So now we're talking about a $50 correction. So now we're talking maybe back to the 382. I don't think we're going to see this kind of correction because of how recent this one was. So that is the challenge when you're looking at this, because you want to look at the history of the tape of what's happened, what's transpired. When we have a larger correction that's just recently occurred, and I'll use the housing crisis or the Great Recession as a good example here, is when we had the Great Recession occur, it was not likely that we would have another Great Recession, like probably less than 0.1%. We would have another Great Recession within a year, okay? It'd probably increase a little bit in 2 years, further out 5 years. But basically, in 10 years, we probably still never reach a 5% odds that we would have that kind of correction. I look at Elliott Wave and wave counts and the FOMO within those waves in a very similar way. So after this kind of correction, the likelihood we see that again is not high on my book. I don't even know that I would give it a 2% outlier event here, and surely not what an outlier typically measures at 8% yet. But of course, it could happen. So my thinking is we talked about where do we want our good to cancel orders? Where do we want to start plugging some things? So I'm going to start with the SPY, and then we're going to add in the other names. Then I'm going to go over the Mag 7. Reason is because I think all of those are going to roll over to some degree, and there'll be some buying opportunities there. And that will be where the FOMO goes when we start buying the dips after that. So let me just drill down a little further. I'm going to come down to the 4-hour here. And, part of this is, right now, the structure that's here, we have this smart money zone at 621. For this to break down, that has to break down. So right now, technically, we're not even in sell mode. We still are in the uptrend, right? So I'm wrong. We close back above this 646.22. Then we're going to continue higher still. Now, some of the RSI here kind of supports that. just the structure here. Quite often we see multiple types of divergence and we get at least one more push beyond where you see the divergence here in the tape. In each situation, we got the divergence, then we pushed for another high, got the divergent, pushed for another high. So we've gotten the divergence, but we haven't pushed for another high here. So I view this that there's still a possible third coming. So this would be drive 1, drive 2, and maybe we get a drive 3 up here. That was what was on my chart. So if we get back above, which we are right at, we're testing it now, that 636.87 is an important line in the sand. So there's no guarantees that we head to the downside. Now, this has been, I would say, a very orderly sell down. This morning got a little disorderly for a minute, but based on the day's actions and the range, our range today, or on this 4 hour anyways, basically been between 639, 633, so we're $6. So our range is expanded to the normal range, which, is typically $8 on the SPY. So until this breaks, I think our next spot, and I think this is going to be an extended, if we break down, we're going to go through these levels, back test, breakdown. So if we break below this 619, then I think we got a shot and 595 is opened up. I think it's very liable, at least to test this gap at 603 is what I think would occur. All right, let's jump over to the NASDAQ via the QQQ. Little different look. Actually, let me step back for a second. What I have here is the broadening formation highlighted by these blue lines. And so the expansion measures back to about 539. On the NASDAQ, our floor really is much deeper in this count. And when I say floor, is when a wave starts to build, it builds these resistance and support zones based on an expansion range. Now, I typically manage those or watch those with Bollinger Bands. I'm not going to pop those up today, but the point being is this is the low of the wave structurally where real trend support is for the entire wave. Our current trend support for the entire wave is way the heck down here. So we are way overbought as far as. Now on the weekly, the drawdown for the NASDAQ could potentially be much more aggressive than the SPY. I don't necessarily see that in the individual charts yet, but collectively when I'm looking at the whole picture, we want to look at it that way. So I'm thinking our box on the NASDAQ, if we're going to get this full-blown correction, is roughly between 457 and 380. So your good to cancel orders should be right in the middle there, roughly at 418 or 420 if we get back down there. Now, let me come back to the SPY. The SPY obviously is much shallower versus the NASDAQ. So your good to cancel orders should be set about 565 here. Going back to the NASDAQ, I want to come down to the 4 hour and just show what we see here. And when we look at time frames or time frame analysis, it tells us a completely different picture. And we are clearly toppy here, and we clearly have seen a decent degree of seller exhaustion here on this last 4 hours. So this bounce is probably where we want to take on a short. We want to pick something up like the NASDAQ, like the TQQs is what my thinking is, because I think that order we can start filling back up around 571 on the NASDAQ, which I don't know what the mix is on that with TQQ, but I would assume it'd be somewhere around $73, 72.50 is where I would think it would be, with the idea that we are going to follow through and get some kind of equality here. And I'm spending a little more time on this specific issue because I think this is where the trade is. So let's assume we get a 50% back level. On the NASDAQ, this trade or this short time window I'm looking at is we're trying to get a piece of that 543. So that $20 to the downside is what my thinking. All right, let me jump and go over the Magnificent Seven, and I'm going to stay on the 4 hour. Just wanted to go through and give a visual. This is roughly where I think our weekly target potentially could be if we're going to roll over. So we have some clear weakness. We had a much more aggressive pull-off on Metaplat, much more aggressive. So an ABC correction on this, if that's all we're looking at. We've gotten our A, we're going to get our B, and our C will be right back here towards this shelf. So now, as far as good to cancel orders, I want to come out to a weekly. if you're not trading it short, the GTC order should be down around 637 to pick up Meta. Let's look at Netflix. The GTC order should be about 1,082. Again, I'm going to come in, put the ABC structure on this. Actually, go a little deeper on Meta, maybe 1,050 if you wanted to pick that up. All right, let's look at Google. Now, Google at this point hasn't broken down from trend at all. This trend is still in play. It has not rolled over. The head and shoulders is not invalidated, but I'm measuring down to the 158. But note how deep the retrace is here using Lux algos. So the reality is Google could flush all the way to $140. So that is where I would have my starter good to cancel orders on as far as Google's concerned. Now let's look at Amazon. Really hasn't broken down, but it definitely has much more of a bearish look here. It's still holding. If we were using our trend anchor at 211 and our trend anchor at 161. However, the Amazon good to cancel order would be at 155. And now the reason I'm saying good to cancel orders is because the reality is if we are going to get a major flush here, it's going to be quick. I mean, we're going to have this dump, right? We're going to find a base. It's going to be over. I don't think it's going to be slow and lethargic at all. I think it's going to be very aggressive because once everybody starts pulling all those orders and the exit doors are packed, then people are going to start selling at discounts because they're concerned about Armageddon. So the fear of loss has a completely different factor in how aggressive we sell when we have everybody running towards the exits. Now, I still don't see that kind of event, but I'm addressing that because if you don't have a good to cancel order in, you're not going to catch a bid at 155 if Amazon goes down to that level. You're just not going to have it there. And now it'll roll off your books in 6 months, but roughly, if you don't have good to cancel orders in, it's not likely that you get filled. Now, Apple, again, much deeper here. I would say that I'd have my first GTC orders down at 144. Now, it's done nothing wrong here, but the ABC is much broader as far as the picture here on this one. So if we look at this is our A, this is our B. So our C clearly measures equality down to 144. Now, Microsoft has rolled. I would say that the 478 is valid. When I posted this chart, I don't know exactly when, but right now it's spot on. Our smart money is down here a little lower at 370, so it's going to say that it's going to oversell. So the good to cancel orders, I would have a 387, 385 number. Now you can stagger those as well. You can put, you can buy 10 shares if you want to at 397, buy 10 shares at 375, buy 10 shares down at 348. The idea is to get filled in a piece, and then obviously once we find our floor, then we start building back a position. So you can structure that any way you want to as far as how you're comfortable in it. Now, Nevada is really, I don't think we pull back this much. I'm mixed because, we're probably overbought and we need some kind of government intervention to limit access to the chips for Microsoft. For NVIDIA in the United States, I think. Almost like a ban for us to get back to 137 here. However, that's a decent sell candle here. That is a decent sell. So if we're just going to come back and look at this and measure our current leg of where we could retrace, 50% back is down at 135. So that is probably a good spot to have some good to cancel orders on NVIDIA because I don't know that we'll know if the market conditions have changed and we're going to get that kind of stuff. All right, so let's go through some of these names. Now, we're going to go through these from a standpoint of good to cancel orders, where you want them. Okay, Equinox, roughly at 650 as far as a pullback. Sedge or Solar Edge at roughly $24. UMAC, at this point, I would say $6 as far as a pullback, but it does have a little relative strength today. It's not broken down as aggressively as some other names. And ironically, AMTX is still holding up. I don't think we take out this low at 219. So, however, logical place would be 50% of the smart money zone at 175. We get back down there. That's where I would be entering. Let's look at ENVX. Now we're building out the rest of this corrective leg. So, my thinking is $7 for good to cancel orders on ENVX. ENPH. I don't have a really good smart money box on this one. Hold on, I'm seeing where this is. We've already broken below there. Roughly $18 is what I would have on ENPH. Optic Labs has already hit and our second target. It tagged it, wicked off of it 38. Good to cancel orders. I'd go back down to the 618 at 32, and then maybe I'd even have a few at $34. However, that's a pretty aggressive sell, which is, when you have a FOMO stock that's going to pull back, and it's more aggressive than the prior leg. This is a normal. I would say it was an equality kind of correction. This looks a little more aggressive. So if this actually becomes an impulse down, that we get much deeper here. We'd have to look at this as, I don't think that this, let's look at this as, so our 3 would be something like this. I mean, we could push right down to that smart money zone at $19. So cautiously, we break below this. If you're still in it, actually, break below this 37. We're probably going down to test this shelf at 33. So we're probably going $4 lower easy. That breaks, then the likelihood is going to be that demand so I would have good to cancel orders down there. If you want to cost averaging, you could even put a few at 27, but I'd have the bulk of it down there at that around that $20. All right, let's look at AST Space Mobile. It's already hit our second fib retracement, so good to cancel orders. Levels were on this. So $40 is probably realistic. Not as aggressive. Looks more like an ABC to me than an impulse on the corrective side. So equality comes in probably right around $38. So that's a good spot. Probably put the good to cancel orders. However, I just have a piece here because realize that smart money band is going to be way down at $23. So if the market's going to give it up, that's where we're going to head. So, all right, let's go to our swing trade notes. Now, none of our names from this last week work, which I kind of expected to some degree. It's really hard just doing a bullish kind of an article because it's just challenging. However, under fundamental trends, that's what we are. We're really a macro, micro, swing around the edges kind of thing. So that's the thesis that we're running with. So I have no new entry interests on HROW, CDLR, or DLO at the moment, or TMDX. They're sort of mute because they were position kind of trades. Now I'm going to go through the names that really we want a piece of. All right, Clean Spark. So we're in our smart money zone here, and we've tested this $9, a little bit of a wick off. We get back down to about 825, 830. I think that's a good spot to put a piece on to build a long, because Clean Spark, I think, benefits tremendously from AI. That's because ultimately it's a service that, when I was looking at OpenAI and what third parties they're using, they're using the best of the best as far as third party, and then they have layers when it comes down to security and other features they're bringing in. And CLSK has just been on a lot of different people's radar that I respect. So that's my thought on that. Also want a piece of 4, however, and this is relative strength here. So as long as this holds and we start getting a better flag, right, I think we are in Mound 2. This is one I definitely want to get a piece of. OSCR. This is another one I want to get a piece of. All right, as far as good to cancel orders, maybe around $14, $13. I see no reason the structure breaks down below that 1288. I would be out. Lilly. I also want a piece of Lilly. And we've already taken out our second fib level, and we've gotten a nice little push here. So we could be done right here. This whole shelf, is just symmetrically perfect. However, with market weakness, we want to watch this one for relative strength in a deeper drawdown and see if we can get a better price. That's my thought. However, we're back above this 707. We've probably missed it, but I would probably have some good to cancel orders down here around 575 or 580 as far as a thought to get back in there. Now, I also want a piece of and forgive me, I'm just going to clear these out to be quick. TSM, however, good to cancel orders for me should be around 190. And forgive me just to being quick. I'm going to clear this tape off as well. Go back for a reset. Sometimes it's the only thing when you're limited time you can do. So corrective wise, I would say at the smart money zone at 806, I would be interested in getting back into Big Sky. Another name that I'm interested in getting back into is UPST. Now, good to cancel orders are going to be way the heck down there. $25, $30 is roughly where I would look at putting a piece on. But I think once we get this correction, we got a clear expansion back to the upside. That's my thought. All right, looking at Aviv, very aggressive look to the downside as far as these names are concerned. Good to cancel orders probably around 157. AEVX, I mean, we are actually right there. There's no smart money numbers here. The only thing is it looks like it might be an impulse. If it does, it'll do something like this. So I'd have my bulk of the orders down there around $7.50 or $8 on this one. Gets back above 16.78, then I think about picking it up for a long right there. I'm going to have to go down to the 4-hour here. I want a piece of Circle. This is really how I, in a drawdown, I want to get my shopping list ready of what I want to buy and then clearly have an understanding of where I want to allocate, so I've drilled down, I'm looked at these numbers, so I'm looking at this as a corrective leg. Good to cancel orders for me are set at 100. And I'll probably add some as I see more of a bottom forming this expand, because we're going to have this as like peaking or flushing drive 1, flushing drive 2. So we should have a third flushing drive that should come in right around here. So I want to watch structurally how that plays out around 122. And then DHT Holdings is another one that I want a piece of. However, my good to cancel order on this one is way the heck down there at 950. Now, Platinum is another one I want to pick back up, but I want it after this breaks down. I have some good to cancel orders in at 105. Then Irene is another one on my shopping list. I have some good to cancel orders in at $15. And again, I'm looking at this as an entire flag. In our prior conversations, I was looking for, my target was way the heck up at 21, just absolutely nailed it as far as a number. SPWR is another one I want a piece of. I have good to cancel orders at $1.50. Then I have Planet Labs. I have good to cancel orders at $5 here. Now AST Space Mobile, roughly 38 to $40 for good to cancels. And let me switch to, did I cover what I wanted to? Okay. SBET's done nothing wrong except for I started liquidating some more positions. Last night I put in quite a few of good to cancel orders. At this point, I've pretty much been taken out of everything I wanted to exit. But it's done nothing wrong for me. It's just in this market, right where we are potentially at this top, I want to start trimming. Now, ironically, Wolf is really, I want another piece on this. So I've got good to cancel orders in at 705. And where else? BTU. Now we are at, I was buying common shares right at 16 and I want another piece. So I think I have another set at $15 for a good to cancel order. If Trump's LNG, the number that I've been reading is somewhere around a 10% increase in LNG exports with the deal, and Peabody Energy is one that will benefit tremendously from that, and that's the reason that's on my radar. Looking at Galaxy Digital here, really it's buy now, but good to cancel orders should be set around 1875. Roughly, it gets down to this zone, maybe even a few at $20. I don't think it's going to get back down there. Your sign would be close above 24.45. Then I might take it long. At this point, I would only be chasing that wave 4 to $28, and then maybe it breaks down from there and we get another shot to get back in, but that's sort of the thought. All right, Soundhound is just dumped, rolled over. Yeah. So we're a little upside down on our cash secured puts. I did not close those out. I wanted to hold because I was thinking we'd get at least 50% back. So maybe I would eat 50 to 75 cents at the end of the day. All right, looking at Grab Holdings. I mean, really has done nothing wrong. It's right where we wanted to be. So our yield play is in full swing there. ONDS is actually completely overshot where I was thinking it would go. So, we have $5 January covered calls sold. So, I mean, we're just sitting right there. So we'll have that premium from our entry price to the exit price when it comes. Let me address IBIT just for a second, because we really haven't. We're doing that sort of that descending triangle kind of look, a little of an aggressive one. There's a lot of volatility here. So we've sort of done this, right? So maybe we do something like that before we break out or continue to the upside. This shelf breaks, I would be trimming though. We have a weekly close below 63.72. I'll take half of my futures and I will close those if we break below that shelf, which is a similar shelf for Bitcoin. And I think I've covered everything that I want to, but I'm going to go through just a few names in our punch card stock. Micron, good to cancel order about 109. PLTR, we pretty much are there, at 155. This has been a name to study for expansion in this kind of market. The challenging part here is we just are now confirming to the downside, but we might not get any diversions here. So a solid GTC order would be around 129. And now I've closed XLF. Let me finish these and then I'll go back over that and why. App Lovin, really, we're here. Good to cancel orders at 375. Maybe add a little more at 350 if we get down there. But right now, this is acting like it is ready to keep going, not stop. I wouldn't say it's relative strength, but consider that wick off on seller exhaustion. That's pretty aggressive, even for the tape. We got a decent one over here, but it was a redder candle. Decent one here, and then we got to bounce. So maybe we do bounce and this becomes an impulse down. That potentially could be the case. And I'll just chat about XLF. My thinking was the banks were weak and there would be some kind of follow through, but we didn't get that. So that was the main reason I pulled that this morning. So looking at this as an impulse leg, we really need to get, excuse me, we should probably play out. I don't think it gets much below 375. So we get back above, we got a ways to go still. We got to get above like 417 for this to be a little more bullish than we are, but I still like the structure. Good to cancel orders would be where I would set them at. Okay, let's look at our relative strength from the punch card stock. VBX, obviously you don't want to buy it. Good to cancel orders around 550. BBAI, good to cancel orders around 375. NTNX, actually could put a little piece on this here because our final leg is probably 61. So I'd have the bulk down around 61, but I'd even do three lots, 67, 64, and then 61.50. ENB, we got some room to the, it's holding strength here. I get real interested at 61. INDI, I get interested at $3 on this one. And we're going to cover just one more. Relative strengths, NECB, Northeast Community Bank. It's already in play, actually. My only issue with buying this here, you could sell some cash secured puts, is just that the way this structure looks. So, and when 1 equals 5 on an impulse leg, it typically rolls over and we get a leading or ending diagonal behind that. So I would think that if we are going to push up, we'll push up maybe to 22 and then would flush. At least that's structurally what I see there. Let's do XPRT, relative strength, essential. I noticed that a few of the real estate names were getting a bid, so that's potential. And then the next one that I wanted to go through is BRKB. Now, notice the relative strength here. And they really need to cut this share value on this so more people can do cash secured puts on this one. Because it's just too big of a trade for cash secured puts, $500,000 in margin to be able to trade those. So, but scaling, good to cancel orders. I don't think we take this out, but the number would be 479. All right, let's look at XLF. And at this point, I think what we're seeing is like a flight to what everybody's viewing as safety. So I think that's why we're seeing that bid we got in the financials. And the weakness seems to be in specific names, like, for example, BAC held up well, right? There's relative strength there. Citi is not relative strength, but it's still holding up well. You didn't see that. I couldn't remember the symbol for Wells Fargo. Wells Fargo, it's actually a decent spot to add a piece on this one. But what caught my attention for putting on XLF was Goldman Sachs, because this was that candle right there is what got me, because it looks to me like it was ready to roll over. It's holding support at this point. It's holding that smart money zone. And that same candle caught me on Morgan Stanley. Those were the numbers or at least what I was looking at as far as potentially pulling over. That obviously did not manifest. So that was the reason that I closed those. So, well, guys, that's what I have for the day. Any other questions? VIX. I don't have, I still have my common shares. I did not sell covered calls this morning. Probably should have, but I didn't. It's not, we're getting some mixed signal. We really don't have a serious bid here. We have a uptick. Week low. To be very candid, outside of the fact that we were overbought and the structure looked like it was ready to roll over. We're not seeing a lot of warning signs that this is a huge sell right now, even after today, if we look at that. So that's the challenging part. I don't want to add any additional cash secured puts. I don't want to add calls here either. And that's challenging. Reason is I just don't have the conviction that the floor is going to hold or that we're going to break out where premium doesn't just absolutely decay. And that's one of the challenges that we're seeing right now as far as premium is it's all over the map. I mean, it's either the algos or AI is doing a very good job at manipulating price to the point we're not benefiting from it as much. Since we went into these extended trading hours, the game's changed. You either catch the opening range or you basically have missed it, or you happen to be in the right place during the extended hours, then obviously you're in the right place. Otherwise, it's a luck of the draw. And I don't like playing the gambling game when it comes down to stock. I like the higher risk reward plays. And when I know I can pull a piece out in specific place, and right now I just don't see that. Yeah, the George, I'm holding until I get my price. Either I get out at my $50, right, or I get 45 and sell some covered calls, and that's it. And the reality is the way what we're looking at overhead, those common shares you may still have a 20% gain to the upside. So that could be done here. Just tag the gap, or maybe it's a little bit of a tick above it, went just above it. Hasn't rejected it. I would say B is very viable if we're looking at, I'm just counting as I'm looking at the chart here. So we got Flushing Drive 1, Flushing Drive 2. It's an A. It's clearly a B, peaking. So maybe we get one more for B. I still like it at $36. And with that, folks, we're going to call it a day. Great trading. Up TSSI. Good spot to try a piece, actually. 1250. If it gets down there, or even at the top of that smart money zone at 13.15. But clearly 692 or $7 is where you really want to put your good to cancel orders at this point. It confirmed on this low, so this is a divergent low, which is good. So that we're probably in. Four's probably here. Actually, it's if the market conditions were different, this would be a perfect 50% back candidate. Measure off the shelf, which would be $22 here. Yeah, it's a confluence of where the history of the tape, as far as the smart money zone, very much like supply and demand zones, but it looks at the daily, the weekly, and the monthly, and then it gives you an average line. So it basically just takes the same data and looks at it another way. And that it's like studying data from any source for any purpose. It's how you skew it. But that's where it's perceived where the institutions will push the trigger and buy. So they have their good to cancel orders in on TSSI, between $13 and $12.15. That's the easiest way to look at it. I still don't like Intel right now, even though it does have some. Another one that really is just recently caught my radar was Cisco. We're in this. Like I've said before, we're in this chop zone from this 27 down to 17. So good to cancel orders, 18 to 1950, maybe even some at 1825 is where I would be interested in that. And since I mentioned Cisco, let me just go over that one for a second. Because this supposedly is a major benefactor from AI. And, we've already sort of hit this zone. I think it still gets a decent sell. But this is one of the stocks that I want to pick back up. I've been drilling down from a micro macro standpoint, which I don't do very often. Mostly all my work is revolved around technical analysis. And then I have names that catch my radar, related to AI or other topics. And then especially with what I've built into Sentinel because he really has gotten pretty smart at looking at stuff, which I normally would not have time to do. So at this point, I can upload any name, and then he's going to give me a printout, or she, or whatever it is, of roughly all of the options that meet the criteria that we've outlined in how we want to analyze the stock. So all I got to do is plug in a chart. So I just deliver 3 different time frame charts to him, and then it's going to deliver that analysis. And that is a huge advantage. But Cisco is one of those names. I would really like Cisco down here at Transport, but I don't think we get down. So I get real excited about $57 to the downside. And I believe I have some good to cancel orders set at 60 already. All right, let's look at Amazon. And we went through this sort of at the beginning. Amazon has some huge downside if we are going into a deeper recession. I don't know that we are. I think what would need to happen would be the Fed doesn't cut, but I don't know that we give up this demand shelf. So where that smart money's at 199 or 200 sort of is a psychological level. It also happens to be kind of equality for an ABC. So if we're looking at this as A, this is B, and our C comes in down about here, that pretty much that $200 is right at it, maybe even a little shallower in that ledge, where this breakout was rejected. That's at 206.28. However, in this, well, they left on the hardware side because somebody paid them $5 million or gave them a slice of the new project. I mean, the amount of money that OpenAI has dished out to steal talent is absolutely insane. I don't remember what the number was, but when they disclosed that to the investor, that their cost factor, I think it was 80% because they needed to acquire the talent to get the job done in the time frame that they needed to get it done in. So, that's what we're seeing is we're seeing the skilled labor that can build AI as a very specific specialty. So there, I don't know that I think it has a lot to do with the fact that Amazon doesn't really have a big moat moving forward for AI that we can see, unless they somehow attach something to AWS in a way. But that in turn also kills the user side where they're going to because if AWS puts in its own form of competing AI, for example, where it's going to compete against CRM. CRM is going to stop using their cloud. And that'll be across the board. So I think there's a fine line there because their moat is, obviously consumer sales, AWS, and the other tech stuff that they're involved in. And, they don't really have that meta kind of growth from AI, or they don't even have that Microsoft kind of growth from AI. Microsoft clearly is capitalized on AI. Google is capitalizing on AI. I think Google has a much larger moat. And I think realize we haven't really started with AI yet. So, this competition, I think, is just going to keep getting much more deeper as far as how they're outbidding. I can see somebody taking a contract for 6 months and canceling the remainder. They have a chance to renew it because they get a better price. And I really can't blame them. So, all right, I think we did look at PFE, but I'll do it again real quick. So PFE, I'd like it back at 23 for some good cancel orders. The second lot down around $21. All right, folks, we're going to call it a day. Great trading. Until next time.